Hello and good morning, listeners. This is Almus Market Mornings, your daily dose of global financial updates with Shikhar Garg and Jayaram Krishnamurthy. Now, folks, after an extreme bullish start for gold yesterday during the early Asian markets, the yellow metal corrected in price to lower than $20-30 against a troy ounce. Now, this was just as anticipated by UTK, so that was quite brilliant. But we also saw the Indian benchmark gapping up and further making a new high. The US yields, quite closely tracked by the investors for sentiments around the rate cuts, went a bit higher. And today we have the Australian Central Bank with their rate cut decision or rate hike decision or a rate pause decision, which along with the inflation update on the Japanese economy. And we've already seen some bit of inflation cooling down in Japan. So, JK, what do you think of these developments?
Good morning, Shikhar. Yes, I think last few weeks we had seen a situation of everything rally, and yesterday something that I saw, everything slumping actually. The bond prices fell down, which means the yields rose by about 8 points, and mainly on profit taking by the longs in bond ahead of key events of NFP and FOMC next week. Even as the Fed Watch tool shows 58% probability of a rate cut as early as March next year. Yes, brought forward from April actually. I feel personally markets are getting ahead of themselves, and in this context, any hawkish tilt in Fed statement next week or NFP in excess of 250,000 this week can lead to a bigger sell-off in bonds. Also, let's remember that the US government is still to borrow a lot of money, and a lot of maturities are ahead for the old securities issued by them. Before the NFP data, we also have the ISM services today, which will give some leading indication as to the activity levels and also employment. So, of course, we do have the ADP payrolls data tomorrow and the job cuts data on Thursday, which will give an early indication on the job situation. On the stocks, they kicked off December on a strong note, carrying on from November rally when S&P recorded the highest close for the year. But they were put to test yesterday, faced with a slew of economic indicators ahead. Yesterday's near 1% fall in S&P and 1.5% fall in NASDAQ is really not surprising, considering how they had rallied in the last few weeks. Going forward, seasonal factors could, of course, favor another rally in stocks, but markets will have to contend with updated views of Powell, actually. So even so, we will be keen to see if any new highs are sustained, even as valuation concerns are rising. Dollar was not left behind in position pruning, as the dollar index rose another 0.6% yesterday, led by a fall in the euro. As I updated yesterday, the market is started to discount a rate cut by ECB in April next year. Short-term positioning in the dollar seems oversold, and that favors for the short squeeze, although our medium-term view remains bearish for the dollar. As of now, dollar index is not far from its year-beginning level of 103.66, even with all the talk of US economy slowing, yields falling, de-dollarization, etc. So there's a lot of downside to the dollar, also considering the dire fiscal situation that the US government is in. We know that two of the rating agencies have already downgraded the US. So we really need some catalyst for rebuilding the recent rally in the currencies in the form of improved economic performance of Europe, China, or US economy to depict more weakness. Yes, China did give its survey result on services sector. Services activity expanded at a quicker pace in November. A private sector survey of S&P Global showed, and an upturn in new businesses were the best reason for 3 months. For the last 3 months, amid reports of firmer market conditions. As you said, we have ACB, the Australian Central Bank's rate decision in next 5 minutes. No change is expected, and that is supported by recent data showing inflation falling. And talking of inflation, we had more countries now seeing prices moderating. we have seen deflation take over in Korean economy, where month-on-month prices fell 0.6%. It's a fall of 0.6% in the prices versus 0.3% plus last month. Tokyo inflation rate, which is seen as representing the country's overall inflation, rose 2.3%, much less than 2.7% that was seen last month, and yen probably weakened above 147.20. Yes, as you mentioned, gold did make a very substantially new high yesterday, above 2100, but that happened in illiquid Asian conditions, not supported by volumes. And I think European and US traders were very happy to take their profits, particularly as we are approaching the year end. If you count from the low of 1810, we already have seen more than 10% rally in the almost 15% rally in the gold, which it should be quite attractive for investors to take profit. So that's the reason why gold came down. There's no change in the fundamentals either for the break above 2070 nor for it coming down. It's all technical, and therefore but I guess the gold prices are well supported near 2000, even as we head into Fed changing its monetary policy in the next month as per market expectations, unless the upcoming data or the Fed statements in the FOMC meeting on December 13th changes that market outlook. On the rupee, the currency, not so surprisingly, failed to benefit from the good news of last week, the GDP coming higher, and then the election results, which portend former stable government. That's as per the expectations of the markets or the pundits, I would say. But while Nifty made new all-time high and possibly will make one more new lifetime high today, rupee was almost at its lifetime low, in fact closed at one of the lowest. So here the factors are different. The flows are not favoring the rupee. As I read yesterday, there was a lot of import buying that jumped into the market after it opened lower than Friday's close. So that was the reason why we went almost near 83.40. And of course, I think central bank may not be happy to let the rupee fall much more from these levels. So we are at the higher end. How much we go down from here on any selling, we know will depend upon what global factors will prompt it. Thank you.
Okay, JK, that was quite good. And yes, there's a very interesting contrast which we can see in our domestic markets. I mean, our domestic benchmark index Nifty at the all-time highs, while the rupee is trading near its all-time lows. So quite an interesting contrast. But apart from that, as JK mentioned, folks, we've seen some sort of profit booking in the gold, although there has been no change in the fundamentals. It's simply adjustment of the positions and the profit taking that we can say was being observed. On the global side, we can say the Reserve Bank of Australia, or RBA, is expected to have no change in their rate regime as of now and go ahead with the pause. While the short-term position for dollar looks like a bit of oversold, and hence there is a possibility of a short squeeze that can bring some sort of strength in the dollar. That's it for today, folks. We shall come back again tomorrow while the market participants continue to look for catalysts that can bring about some change, and we bring those updates for you. Thank you so much for joining. We'll come back again tomorrow.